From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. I'm Nadine Blaney, and I will be joined shortly by David Scott, who's joining us from StoneX. We're getting the band back together for a short time this afternoon. I would like to take you, though, through what's happening on markets to get us going. This is the CBOE Australia Index. It has closed 0.75% higher. So looking nice as we have the last of the day's trades going through the ASX. I'll keep you updated on how that market finishes up. It will likely be somewhere around this level, currently at 7,844. Now, we have seen US futures be underwater a little bit today. So we've got the E-minis for the S&P 500 and NASDAQ's mildly negative at this time. We'll keep an eye on that one for you as well. But let's not take anything away from this ASX rally on. It came, the day started, pretty strong, and it continued to be so. A little bit of enthusiasm waning by the end of the afternoon, but all said, looking pretty good after what's been a really rough couple of weeks. M&A Monday, SiteMinder. Yeah, we've got a takeover offer on the table, been confirmed by Tyro Payments today, and the share price is absolutely rocketing. I also had a conversation with Benjamin Yeo a little bit earlier on about what's happening in M&A land, and that can be found on our website, ausbiz.com.au. I hosted the call today. Raymond Chen was one of my guests from Morgans, and he put it on my radar that we've actually got a follow-up to the MPC happening in April, when Chinese authorities often do outline with more detail what they plan to do to help the economy along. So questions about Sino stimulus. We did have retail sales data out in China today, and it looked pretty good. And the hints of stimulus coming has done pretty good things for parts of this market, and that includes BHP. The miners are looking really good. BHP at $39.61. That was mentioned on the call today as being a buy anywhere under $40, putting on more than 2% today. Fortescue up by 4.5%. And MinRes, so Norges Bank becoming a substantial shareholder. Also, UBS putting out a positive note. So it looks as if the crowd is following, and some bargain hunting buying going on in MinRes today. So gold, we did have that 3,000 level achieved. Pretty big milestone, record high for the price of gold. A bit more of a mixed picture though, a bit more nuanced here locally. You can see there Northern Star off by 1%. So we'll keep an eye on how those companies settle today. And the banks, we did have news that we had a defection from NAB to Westpac. But generally speaking, it was a positive session for the banks. And on our blue chip, the call special, boy, I'm name dropping a lot here. We chatted about Commonwealth Bank and Westpac. So it was Ray Chan, and it was also David Lane joining from Ord Minnett. So NAB changing its executive leadership team, I mentioned. We've got Nathan Goonan resigning as its CFO to join Westpac. We also have Woodside Energy signing a long-term agreement with China Resources Gas International to supply LNG. Shares are up by 1.8%. Paladin Energy has been granted an exemption from Canadian non-resident ownership policy in the uranium sector. So that opens up the possibility for more projects being executed by Paladin in Canada. Ramelius and Spartan Resources are set to merge. Didn't have a great impact on Ramelius' share price, as you can see, off by 1.5% to $2.18. And as I mentioned, Tyro Payments confirming a non-binding offer to acquire 100% of SmartPay's shares for $1 Kiwi apiece. And yeah, as I mentioned, we have SmartPay. Just let me find out what it's doing. Up by about, 40-something%. So really big jump coming through on that M&A activity for SmartPay. Yeah, it leapt 49% at one stage of the game today. So let's get some analysis as to where we are sitting as this Asian session starts to wind down. David Scott from StoneX. Scotty, what did we learn today as investors or traders?
Well, there's still a bit of trepidation out there despite the price action. That's the first thing that came across my mind of that question. Look, we saw a big rebound coming through on Wall Street on Friday. We followed suit just by the fact that they rallied, but I don't think there's really a lot behind it at this point in time. So I think we need to get more clarity, in particular when it comes to what's going on in China. You're talking about the China stimulus measures potentially coming down the pipe. About 2 hours away, we'll get a press conference where they're going to outline some of those key details, how to go and boost consumption. That's going to be a really key near-term risk that traders and investors should be watching.
Okay, so just flesh that out a little bit for us, because I did mention that we had some data coming out in China, retail sales looking a bit better in January and February, and so much comes down to the state of the Chinese consumer. Of course, the Chinese consumer is being heavily influenced by the property market.
It is, and one of the key things that came out of that data dump was that when the house prices data that came out about 30 minutes before the major stuff actually showed an acceleration in declines again coming through, rather than the unchanged kind of figure that we saw in the prior month. So to me, it just suggests that there's still not real stability in that housing market. So when you look at some of the commodity price moves today and the like, it's not a lot of optimism out there. I noticed on the board there some massive gains coming through in the iron ore miners. But I'm sitting here looking at iron ore futures in Singapore that are off more than 2% and giving a pretty bearish signal. So yes, the data itself was better than expected by and large, but some of the key things where it comes to fostering that consumption side of the equation, the housing market's really important, and that wasn't very good. So that's an area of concern moving forward.
Okay, so that's China. I mean, now we go to the US. Scott Benson saying that he wouldn't rule out the chance of a US recession. I mean, with that type of rhetoric out there, I noted that the U.S. futures are lower. I mean, nobody's going to get too excited when you've got the Treasury Secretary making comments like that.
Yeah, definitely not excited. And it gives you some insight, much like Trump's demeanor at this particular term of his presidency. The fiscal put, the Treasury put from Scott Besant, both from a markets and both from an economics perspective, is clearly a lot lower. The pain trade, don't need to go and see significant losses coming through to go and start taking action other than what we've already seen. Now, he didn't really go and deliver anything earth-shattering. No one can go and guarantee that there's not going to be a recession and the like. But to me, that was the really key thing, that again, just reinforcing that, hey, we don't really care what's happening right now. There's going to be some short-term pain. If we get it right, there'll be a lot of joy out there for markets. But there's a lot of risk in between those 2 points.
Yeah, and we do get key data out in the US this week. Retail sales, the US economy is all about the consumer. What do you think we will see?
Well, markets are looking for a big rebound. We saw that unusually weak performance in January. And I know that the headline rate at the moment is expected to go and increase 0.7% in February. But looking at the Chicago CARTS survey, so basically they're going to map a whole bunch of spending patterns, and they're going to release the outcome a day before the actual official release comes out. It's looking for another big decline coming through, actually steeper than what we saw in January. So to me, that creates an immediate downside risk. And we just know how markets have been behaving recently when it comes to the US economy. Any signs of weakness hasn't been celebrated. It's not all about the Fed cutting rates. It's actually led to further losses. So we got another big decrease coming through in retail spending. Look out, if we get a pretty nasty session later on this evening.
Well, nasty session, yes, but that does bring my mind to the Fed. I mean, you can't imagine the Fed is going to move in a hurried way to cut rates when you consider, all the tariff rhetoric out there. But yeah, where are we sitting in terms of the Fed, in terms of market pricing?
Well, market pricing, there's almost zilch pricing when it comes to the prospect of a cut, and that's understandably so. There's still a lot of uncertainty out there at this point in time. Where I'm looking at is where it comes to the forecast in particular. What are they going to go and say about GDP growth, giving signs of weakness that we've seen so far this year? Will they revise it lower? I suspect they will. And will that go and lead to a reaction function where they start to go and add to the rate cut profile this year in the dots? And that's where I think potentially we might go and see a risk that we'll get a third cut being priced into the profile this year, despite all the uncertainty. And if that does take place, you might go and see the US dollar soften and see Treasury yields come off the ball a little bit as well. So that's my kind of benchmark where if there is going to be a risk, it will be that way inclined.
Okay, so I mentioned gold hitting that magical 3,000 level, edging higher as we continue to see, geopolitical concerns, lingering economic concerns as well. Can it go higher, Scotty?
Well, go and zoom out, my friend, and have a look at the longer lasting trend, and that will give you the answer there and then. It is absolute peach of a trade if you got long a long time ago. I remember writing bullish notes when it was contemplating potentially a move to 2,500. We're $500 past that, and that wasn't too long ago. The only thing I'd add is that we're pretty stretched from a technical perspective right now, up at these levels. But you just look around the world, you look at the uncertainty out there at the moment, you look at what the potential reaction function is going to be from central banks if we get another downturn. And I'm not surprised in the slightest that we see even the smallest dips bought at this point in time. Can it go lower in the near term? Well, absolutely. And I'm watching right now at the moment, we're seeing some pretty technical signs that maybe we're looking at some near-term downside, depending on what happens tonight. But beyond that, it's a buy the dips play until the price action tells us otherwise.
Yeah, it has been such a story to start, well, I should say all of last year as well. I was going to say to start 2025. But it's almost like, Scotty, I mean, you've been doing this a long time. You don't know where to look right now. Like, there's just so many markets, there's so many asset classes that you can, break down to try to make sense of how the world is reacting to these shifting sands and the really complex global picture. What's your go-to right now? Like, you can either talk to us about your go-to trade or your go-to market, or how are you making sense these days?
Well, you're right. It is a very complex world, and I'm a very simple person by nature. So when it comes to things that I like to look at, pretty pictures generally are the way that I go. And one thing that I don't think is getting a lot of attention right now is the dollar-Chinese yuan exchange rate. To me, it's a really, really key piece of the puzzle when it comes to broader risk appetite, particularly in Asian markets, while there's been off the ball at the moment. And it's just simply because we haven't seen any meaningful downside coming through in dollar yuan at this point. Every time it approaches the 200-day moving average, every single time it's bounced over the past few months. Now, to go and get really excited about Asian assets and particular Asian currencies, including the Aussie dollar, we need to go and see that level broken. Until we keep in this sideways range trade, at the moment we're seeing in so many other asset classes, that's exactly what's going on as well. We need to see some positivity coming through towards the Chinese currency. If that happens, it'll be a much better picture for the rest of Asia.
Okay, so just back to the here and now. So I mentioned we've got U.S. futures under a bit of pressure after a really good session across the Asian region. If you were a betting man, how would you anticipate the next sort of 12, 16 hours to work out?
Look, I know it's down at the moment, but when you look at some of the moves we've seen, a lot of it looks corrective in nature. There was lots of oversold coming through conditions. RSI 14 was well below 30 across many of those markets. And I think there's probably more upside to come through. The fact that we've just had Donald Trump hit the wires again, talking about reciprocal tariffs coming through on April 2nd, auto tariffs on top of that as well. And markets have barely batted an eyelid. So I just wonder whether potentially that's a signal as to what we might get coming through in Europe. Beyond that, though, all these moves we're talking about right now are just merely corrective in nature. We need to go and see those former uptrends taken out and back in that particular area to go and get excited about a resumption of the bullish trend. There's still so much uncertainty out there, and none of it is particularly good at this point.
Yeah, no. The one thing I will say that we've got this week here locally are the jobs data, the jobs figures coming through. Don't mean to put you on the spot, but what are your expectations? And I'm asking because I'm getting a lot of different feedback as to whether or not we'll see an RBA interest rate cut coming through in May. CBA, for one, thinks so, but both my guests on the call this afternoon think not. And a lot of it comes down to the jobs data, correct?
A lot of it comes down to the jobs data. Obviously, I think at this point, the RBA still have probably a marginal ahead when it comes to looking at inflation prints, but they're very sensitive to any signs of a sudden increase coming through in unemployment. And the one thing with that jobs report as well, if you think back to the January jobs report, there was reported a lot of people sitting on the sidelines who had jobs but hadn't yet started. So naturally, we've got a expectation there's going to be a big increase coming through. If that doesn't take place and we keep having participation at record levels, that will go and put upside pressure on the unemployment rate. So to me, if we were to see like a 0.2 increase coming through, 4.3% or so, there's every chance that the RBA will go and move. They want to go and protect jobs gains, and it's made it perfectly clear over recent months that it intends to do so.
Got it. Scotty, nice to see you. Thanks for joining us on the COB. Maybe we can do it again sometime.
Sounds good, mate. Great to be here.
Yeah, have a good night. David Scott there from StoneX. And the stock of the day was Treasury Wine Estates. I mentioned it was a blue chip special with David Lane from Ord Minnett and Raymond Chen from Morgans.
We think the China growth will continue to be strong, even on a potential higher price. The thing we look at Treasury wine, it has been on a nose for some time, trading on our projected FY26 PE of 14.5 times, and the yield is 4.7%. I think it's attractively priced at the moment. So I do agree with the city recommendation here, despite there's headwind, but I guess it's on a smaller part of the business.
There is some potential also that Constellation Brands, which is one of their big competitors in the US, could look at selling off some of their wine brands, and potentially Treasury might look at some of those, but it could be a bit of a disruption for the market that would be a positive tailwind for Treasury as well. So I think overall that the environment looks quite positive, and that at current prices, Treasury is very good buying.
So let's take a look at what moved the market in terms of percentage gains. Mineral Resources, I mentioned UBS, Insto buying as well, up by close to 12% to $24.48. Also seeing a better picture being painted across the metals and mining sector, including IGO, which is up by 7.3% to $4.29. Westgold Resources up 4.6% to $2.95. Now, there is a negative side to that story, of course. We've got Clarity Pharmaceuticals, on no news that I can see, down by 3.8%. Vault Minerals shedding 3.3% to 44 cents per share. Chorus as well. I had a good chat with Brad Gordon a little bit earlier on about some New Zealand companies in the wake of reporting season there. Chorus is trading ex-dividend today, down by 2.7% to $7.10. NextDC, not getting the love today in the tech space, off by 2.4%, and Suncorp down by 2% as well. And we've also got Suncorp trading without its dividend today. So in the small to mid cap space, there you go, SmartPay 47% higher on that confirmed takeover offer coming from Tyro. The two are in talks. Bubs is up by 14%. That's a pretty punchy gain there on no news that I can see. And BetMakers as well did update on its Irish and UK business. I think it's got a joint venture or something like that there. And share price reacted well, up by 10% to 11 cents per share. On the other side of that equation, we've got Novonix down by 6.5%. It's looking to raise money, though it will be funding its production facility in the States. Brockman Mining, the worst performer in the small to mid cap space, down by about 7% to 1 cent per share. Tonight is the night for retail sales. It's for February. You just heard Scotty talking about it. So we could see a rebound, but we could see volatility if it misses as well. The U.S. Empire State Manufacturing Index for March is tipped to fall from 5.7 to -2 points. So yeah, those question marks over the state of the U.S. economy. You know, some U.S. administration officials are calling it a necessary detox period, but recession doesn't sound good to folks on Wall Street. Tomorrow here we get overseas arrivals and departures. We have Sarah Hunter from the RBA speaking, and we've got a number of companies trading ex-div, Reese, Seek, and Credit Corp, to name a few. So now that this session is officially done and dusted, how did we finish? Well, that's the CBO Australia Index on your screen. We had a late session bit of buying happening for the S&P ASX 200, up by 0.8%, 7,854. So that was a good start to the week here locally. Clearly, anything can happen. We also have news this hour that Donald Trump will be speaking to Putin tomorrow, so on Tuesday, to discuss ending the war in Ukraine. And just keeping an eye on UK data as well. So we've got the growth risks happening and becoming accentuated in Britain, and keeping an eye on German spending as well. That is the day here at AusBiz. Stay with us. We'll bring you repeats throughout the evening, and we'll see you live from 9:45 tomorrow. Have a good night.